Good afternoon, and welcome to the National Press Club, the place where news happens. I'm Allison Fitzgerald Kojak. I'm the 112th president of the National Press Club, and I'm a correspondent at NPR News. We are so pleased to welcome today our headliner's speaker, Larry Kudlow, the leader of President Trump's National Economic Council. Before we begin, I'd like to ask you all to please take a moment and turn off your cell phones. As you can see, there are a lot of cameras in the room. We'd hate to have your phones ringing in the middle of it. And I'd like to draw your attention. There should be question cards on your tables. If you have questions for our speaker, please write them on the cards and pass them up to the head table. They will get to me. And if you're tweeting about today's event, we are at Press Club DC, and the hashtag for today's event is NPC Live. I'd also like to take a moment to introduce our head table guests. Please hold your applause until all of the people have been introduced. To my far left, we have Andrea Edney, the immediate past president of the National Press Club. Next to Andrea, we have Mushfiqul Fazal, editor of Just News BD from Bangladesh. Mark Sheff, the senior reporter at Investment News. Susan Varga, the chief of staff at the National Economic Council. To my left is Donna Lainwan-Leger, former NPC president and co-chair of the NPC Headliners team, which organized today's event. Skipping over the podium, to my right, we have Kevin Wensing. He's a retired U.S. Navy captain, chair of FCA America, and the NPC member who arranged today's event. Thank you, Kevin. Skipping over our speaker for a moment, we have Kimberly Adams. She's a senior reporter at Marketplace and a member of the Board of Governors of the National Press Club. And Mark Hamrick, to Kimberly's right, a Washington bureau chief and senior economic analyst at Bankrate.com, and also a former president of the National Press Club. This is a powerful table here. Emel Akan is a White House economic policy reporter for the Epoch Times. And at the far end of the table, Frank Islam, chair of EL Investment Group. Thank you very much, everybody. Now, the good news for Larry Kudlow was that he arrived at the White House in the midst of one of the country's longest economic expansions. It approached 10 years. The economy is humming along, with GDP growth last year at a healthy 3%. The unemployment rate is at historic lows, and wages are rising. But arriving at the top can create challenges. How long will the good news last? Mr. Kudlow and the White House are forecasting robust economic growth through the next few years. He told Fox News last week that President Trump's tax cuts saved the average American about $2,300 last year, and that Trump's policies are, quote, rebuilding the economy. But the outlook of most economists isn't so rosy. According to my colleagues at NPR and to Bloomberg News, many economists project economic growth this year will be markedly slower than in 2018 because of the effects of trade policies, slowing global growth, and a tight labor market. Larry Kudlow began his career as a financial analyst at the Federal Reserve before heading to Wall Street as an analyst at Paine Webber and Bear Stearns. He served in the Reagan administration, helping to shape the budget and tax policy, and before he took a second tour on Wall Street. Mr. Kudlow is also a media personality, a former host of CNBC's The Kudlow Report, and a host of WABC radio show, and a contributing editor at the National Review. He's the author of several books, including JFK and the Reagan Revolution, A Secret History of American Prosperity, in which he explores the similarities between the economic policies of those two presidents. When Mr. Kudlow joined the Trump administration, observers were quick to seize on his long public record advocating free trade and inclusive immigration reform, which is in stark contrast to the views of President Trump. In response, the president said, quote, "We don't agree on everything, but in this case, I think that's good. I want to have divergent opinions." Please join me in giving a warm National Press Club welcome to the Director of the National Economic Council, Larry Kudlow.
Spot on. Thank you very much. Spot on. Appreciate it. Just makes me feel old, but it's wonderful. Wonderful to be here. I'm dying to take all your questions as much as we can. I do want to just begin with a little bit of an overview, things that we're thinking about. And Actually, no better place to start as a former Wall Street forecaster. The first quarter is coming in much stronger than a lot of us feared. I noticed the Atlanta Fed's GDP now is at 2.8% for Q1. I think they started at 0.3%. First quarter's historically over the last 10 years has been the worst quarter of the year for a variety of reasons, seasonal adjustments and so forth, but they're at 2.8%. And we always calculated, Kevin Hassett and I, that the shutdown probably cost 0.3% of GDP, so really we'll be close to 3% in Q1, and I think we're going to get that 0.3% back in Q2 and then some. So I know I may be at loggerheads with some of the forecasters or maybe even the consensus, and I respect the different points of view, but I really think this is going to turn out to be a pretty strong first half and a pretty strong year. We're staying with our 3% economic growth estimates, so I think that's a good thing. Recent data, pretty good. Nothing's ever perfect, but sticking out in my mind, you get all these data releases, and I still try to follow them. Unemployment claims, I think virtually an all-time low, around 200,000 weekly unemployment claims. That's a great number, and the retail sales number really popped far stronger than anyone thought possible. So when I look at that, I see some nice movement, and I think Wall Street and others are beginning now to join in the upward revisions for Q1. As I say, nothing's perfect, but it looks pretty good. I also would invite attention, a pal of mine, Mark Skousen, who teaches out in California, Chapman University, has come up with a GO number, gross output, which is now being used by the BEA in its calculations of GDP. I don't want to belabor the point unless you ask me, but basically he has found a way to really measure the business sector, business-to-business activity, supply chain activity, which turns out to be in intermediate goods the largest sector of the economy. And anyway, it's growing quite rapidly, 4, 5, 6%, and it's a pretty good leading indicator. And I think capital goods spending, business investment, which is a key part of our tax and regulatory reforms, will outperform most expectations in 2019 and beyond. It is true that our view is a continuation of more rapid growth. The trend line for many years in prior administrations, I'm not being partisan here, Democrat and Republican, trend line's been around 2% or slightly less. We picked up 3% in 2018. I believe we will continue the 3% in 2019 and 2020. That's what our longer-term horizons are showing. And I want to make a couple of other sort of specific points on economic performance and our policies. As someone who was an informal advisor to the campaign, even while holding a job at CNBC, and informal advisor in 2017 before I came in 2018. And by the way, I do want to say how wonderful it is and grateful I am to be able to serve the White House, the country, the president. It's a wonderful thing for me. I'm really quite grateful for this opportunity. It's a fabulous adventure. And as Allison pointed out, I do this once every 35 years. So you got some old Reagan folks still kicking. So let me just offer this point of view. It's a very general point of view, and if you disagree, I respect that. Maybe we can talk a little about it in the Q&A. President Trump is, as I see it, President Trump is rebuilding this economy. He has changed both the psychology and the key policies, and by that I mean, in terms of psychology and his exuberance and optimism as a former businessman, he ended the war on business. He's ended the war on success. He believes strongly that if you do well and succeed, you should be rewarded, not punished. Besides low marginal tax rates, particularly on the business side, and I believe, as you know, taxes matter a good deal, and I'm a firm supporter these many decades of the incentive model of economic growth. If it pays more after tax to work, save, invest, and take risks, you will get more of it. And I think we're seeing that. A little bit of it in 2017, much more of it in 2018, and much more after that. Incentives matter, taxes matter, regulations matter. The war on energy has been curbed, or the war on fossil fuels. We are now the dominant energy power in the world. So the lower tax rates, the rollback of onerous regulations, the opening up of the energy sector, and trade reforms. And I'll come back to that in a moment, but there are some very important trade reforms which I think are going to pan out. I'm an optimist on that. I always take the over, and I can't say for sure, but things are moving apace. So you've had big policy changes, and among other things, besides the better growth, you know, we're seeing, for example, blue-collar employment is rising at the fastest pace, really since I was last here under the Reagan years, with similar policies, frankly, on low marginal tax rates. Biggest contributors to the labor force last year were female, and I think that's good because we hadn't seen that in quite some time. Participation rates are rising. Unemployment rates, you know, overall 3.8%, which is a great number, and it's been down there for several months now. But underneath that, you could go down the list of various groups and see extraordinarily historically low unemployment rates. It's covered a lot of the economy. And we are proposing, as part of the tax bill, and we've released regulations, that we're making a bigger push on these so-called opportunity zones, which invite private investment, again, with tax incentives, that I think will really add to the strength and breadth and depth of this prosperity recovery we're talking about. Every nook and cranny of this economy can share in prosperity. And these are, by the way, urban, they're rural, they're all over, and I think it's going to have a significant positive impact. And finally, you know, on the business side, 100% expensing, a 21% corporate tax rate down from 35, reforms on the way we treat the international income, revenues, and profits. We are getting surging business investment. And quarterly, these things bounce around, but by and large, we're looking at somewhere around, say, 7, 8, 9% growth in what Wall Street calls CapEx, business investment. The stock of capital is rising for the first time in many years. You know, that trend, anyone who's taken an introductory economics course, I'm sure you remember your K over L ratios, capital over labor. More capital, more investment, makes a better labor force with the resources for proper equipment and training and retraining and reskilling, as my colleague Ivanka Trump has talked about it. And we're seeing a big increase in productivity. We're 1.8% the last 4 quarters. I know it's early in the game in terms of our policies, but that's a great beginning. As a result, and here's a key point for me personally, the increases in wages are being earned. And more people working successfully at higher wages, and again, the blue collars are the best example of that. They're actually outperforming in terms of growth of wages the white collars. So there's nothing inflationary about more people working and prospering. Nothing inflationary. And when you have supply-side policies that boost the production, supply, business investment side of the economy, it's actually counter-inflationary. And in my book on JFK and Reagan, we talked about the same effects in the 60s and the 80s, even the 90s, I think, spilling over for similar policies emanating from particularly the incentive effect of lower tax rates, but also the regulatory effect. And we have had a stable and sound dollar. So I think these are big pluses. We'll see if these forecasts hold up. I understand that. I've been in and out of business for a long time, but I wanted to put that on the table. I think we are outperforming almost everybody's expectations. And my final point here is, you know, as a TV and radio anchor and host, I listen to all this new economics about secular stagnation and how America is going to be mired into a second-rate economy, I guess like Europe or whatever. I don't buy it, didn't buy it then, don't buy it now, with the proper policies and incentives, with the proper atmosphere, with the president who's basically saying you will be rewarded for your success, and telling folks to take a swing at the ball. You know, we had a conference at the old EOB, I don't know, several months ago on the economy and work effort and the improved role of women and retraining and so forth. And I remember a couple hundred people came, and I looked around the room, and what I saw was what I call the face of the new Trump economy. Men and women who now are owning their own small businesses once again, because the rewards justified and the government interference has pulled way back. There's a somewhat obscure but important economic stat. Maybe you'll have a chance to think about it or look at it later. It's called new business applications and new business formations. I've looked at this a long time when I was a Wall Street economist and so forth. Those things are booming right now for the first time in many, many years, and I'm heartened by that. Now, a couple of other additional things. I want to talk trade. I'm sure you'll have lots of questions on trade, but I want to particularly talk about the USMCA deal, which is now pending in Congress, negotiated principally by my good friend and colleague, Trade Ambassador Robert Lighthizer. The International Trade Commission just came out with its analysis, showing it's the biggest economic growth impact. I think they said something like, compared, you know, it by itself exceeds the sum of all prior trade deals in terms of their estimates on GDP and jobs. They came out with about 68 billion increase in GDP, and I think 700,000 or 800,000 jobs. I'll call it 1 million just to round it up. Our Council of Economic Advisors, my dear friend Kevin Hassett, has also re-estimated in terms of the very strong entrepreneurial and investment effects of strengthened intellectual property and patent protection, which is hugely important. You know, we think we'll pick up another 30, 40 billion per year in GDP just from that alone, and additional jobs. And the USMCA covers the ground. I like to think of it as old economy, new economy, and both have been improved. On the old economy side, we have better content laws for manufacturing, automobiles. We broke through on the dairy farm issues for our farmers. With the wage laws, by the way, the wage numbers are stronger, consistent with the real world. Mexico itself will have the best set of labor reforms in the history of that country as a result of this deal. And that's good for what I call the old economy and, you know, the resurgence in manufacturing, which President Trump has touted and many people derided, but it's happening. Second point is on the new economy. I mentioned the intellectual property rights and patent protection. That goes through expanding digital services and financial services and biologics. You know, all this could add a half a point to GDP per year if we get it through the Congress. And that's really quite remarkable. We didn't even incorporate that initially into our estimates, but it is consistent with our hopes for a, 3%, maybe 3.5%, maybe better economic growth rate. And my great hope is that UMCA will pass in this session of Congress. I think it's great for America. I think it's great for Americans of all stripes. Final point, I can't help myself on this. I'll be brief, but when I'm not watching Netflix, I do occasionally watch cable news TV at night. I go home. I shouldn't plug anybody, just a generic plug, okay. So, I was listening to some of the recent debates with members of the other party, shall I say. Look, I'm an ex-Democrat, so I don't want to make any bones about that. And actually, I've worked for two presidents who were both ex-Democrats, Ronald Reagan and Donald Trump, so I'm making any bones about that. And I have a lot of pals of mine who are Democrats who used to come on my TV and radio shows, God bless them. I will say this. Socialism is a loser. Socialism is a loser. I don't want us to forget the lessons of the past. I will not dwell on them. I grew up in the Reagan years when he repeatedly said he would overcome and overturn and defeat communism, Soviet communism. And he was right. Today, we have other examples. I'll cite Venezuela, which is a focus point for our administration in the hope of completely changing, and I'm working on various working groups to improve their economy if we get to that point. Collectivist, central planning, government-run economies throughout history have failed. They sap our morale. They reduce our freedom. They tend to turn into really tyrannical political situations, but most of all, from my standpoint as an economics guy, they don't have prosperity. They generate poverty, not prosperity. And it just strikes me as somewhat odd and hard to understand. Maybe I'll learn more over time. We are at the beginning of a new prosperity wave in this country. We are the hottest economy in the world. Confidence is building, as I've said before. Why would we want to pursue policies that could, I think, in total, slice 15% of GDP right out within 10 years with, universal Medicare and other giveaways, people that don't want to work, subsidies here, loan forgiveness, and this and that, everything's free. The estimates range, 32 trillion on the healthcare side, another 20 trillion on the job side. Some people have pointed up to $100 trillion added cost to the economy. Incentives would be robbed, tax rates would soar. 180 million people would lose their private health care insurance, principally through business. That is a staggering usurpation not only of liberty and choice, but actually completely sacrificing the efficiency of what is still a pretty good health care system. It ain't perfect, it needs reform, but still pretty good, and people pretty satisfied with it. I don't want to go there. I do not want to go there. I think that the country, the voters of the country, do not want to go there. Why substitute poverty for prosperity? It makes no sense whatsoever. I appreciate your support on that. I think I've said what I need to say, and more than happy to take your questions on any topics whatsoever. Okay. If I could re-borrow my Diet Coke. Thank you.
Would you like to sit in one of these lovely stools or stand here?
I'm standing.
Okay.
I'm still standing. Thank you, sir.
It's on. Okay. Well, since you ended and I am the moderator, I'm a healthcare correspondent, I'm just going to take the moderator's privilege and ask a question about your comments on healthcare. So it's well known that the U.S. spends about 18 to 20% of GDP on healthcare, which is a good twice as much as every other developed country. And most polls show that people don't particularly love their insurance company. They might love their doctor, but not necessarily Aetna or Cigna. So why is redirecting that 18% from insurance premiums and payments to CVS Pharmacy to a tax that where someone else pays necessarily bad? It's not necessarily going to cost more. It's just redirecting the money.
Well, look, I've never understood. I don't know what the right amount of healthcare spending is, or what the right share of the economy is. I've never particularly understood that line of reasoning, because if you live in a prosperous economy and incomes over time continue to rise, which is really the story of the American economy, going through slumps and rebounds and so forth, people may choose more healthcare. It's a free choice, and I like that a lot. I think a lot of the systems overseas, many of the European countries that operate completely government-run, socialistic-type healthcare systems, I don't know if they spend more or less. The cross-country comparisons are difficult, but I'll take your word that they spend
pretty well
a little less. But they don't do it very well. They don't do it very well. And we do. Now, we can make changes and reforms. Our administration is constantly working on that. Deregulation actions and related matters, we will have more to say about that. But I don't believe, again, a collectivist, government-run, centrally planned healthcare system will work any better than a government-run, collectivist plan will work on any other parts of the economy. I'd like to maximize choice, and I think free market competition works. And that 180 million number, which is a fair number, I've seen left of center, right of center think tanks come up pretty much with the same number. Those folks like their insurance policies. Now, there may be other segments in the individual side that need working on, and I was very critical of Obamacare and remain so. You know, we've taken out the individual mandate and made other reforms, but I think the idea of just taking that away is the most remarkable government confiscation plan I've ever heard. And by and large, we get our insurance from businesses, and we are making it easier. I might add administration policies, whether it's association healthcare reforms or short duration, which we'd like to use as a model for longer duration healthcare reforms, along with a complete federal backing of pre-existing conditions. You know, I think the basic parts of the system are okay. We can do better, but not if the government runs it. I don't buy it.
People seem to like Medicare.
I like Medicare. I'm a proud member of Medicare, by the way. Proud member. Medicare is about 60 million people, and my government, Blue Cross Blue Shield, very good policy. Very happy with that. But yeah, Medicare, I mean, we can make improvements there, and experts are working on that. I'm not here to, you know, to put out any additional info on that. I'm just saying we're working on it. But yeah, I like that too. But again, inside Medicare, there's a lot of choice. So I don't want to belabor the point. You understand, my point of view is I'd like to do as much as we can in the private sector. I'd like to provide as much choice as we can for doctors, hospitals. I'd also like to provide as much transparency as possible. Let me just make a quick point here. Transparency, particularly with respect to pricing, and that would include, and you've seen some stories about some of our latest initiatives, or we're thinking about some new things. Not just drug pricing, which is very important, and I might add prescription drug costs have come down in the last year as my great friend Scott Gottlieb at the FDA put a huge volume of new generics on the market, I think 1,600 plus, and there's much more coming. But we want transparency of pricing for hospitals, operations, doctors' fees, and so forth, so the consumer absolutely can have the best information possible.
Okay, we'll move on from healthcare because a lot of people
Please, anything you want.
People are wondering why the Trump administration isn't concerned about the deficits and national debt. Is it a threat to future economic and national security of the United States?
Yeah, well, look, I think the solution and the key issue there is growth. And I write a lot about this, and actually both the books I put out, and you've heard me say this down through the years in various columns and anchoring. Growth solves a lot of problems. It solves employment problems, it solves salary and wage problems, it solves opportunity problems. It also will solve fiscal problems. Here's just a broad brush point. Now, you know our OMB estimates, you've probably seen them. We're looking for a basically downward glide path with respect to deficits and debt as a share of GDP, as a share of the economy, which I think is the best way to measure that. So we're looking for a downward glide path, and I think it's already begun. Having said that, if the economy grows, from about 2% annually between the year 2000 and the year 2016, which is what the facts are. That's subpar growth, American style. You know, for prior 50 or 60 years, we actually grew at 3.5% real for the post-war period. So you drop down to 2. Well, guess what? You have slower growth in everything: capital, business investment, jobs, wages, incomes, and that's your tax base. And we've lost a lot of revenues from the shortfall in growth. which has contributed, and I don't even want to be partisan. I just don't say it was this one or that one. I think everybody contributed. If we pick up the growth rate, you can do the numbers on this. You can use CBO rules of thumb, a percentage point above the baseline. So instead of 2, if you get 3, you pick up, I think, $3.5 trillion of lower deficits over 10 years. I mean, that's a nice way to do it. And that's kind of the model. We're not using the CBO model, but we're using that rule of thumb. And others, private people have the same rule of thumb. So to me, it's a combination of picking up the growth rate and limiting government. We have tough budget this year, very tough budget, 5% in the aggregate. And the president has said if the budget caps, the so-called budget caps that go all the way back to 2011, maybe 2013, there's a discussion about what the base is. If we exceed those budget caps, we will employ an across-the-board sequester. We will do that. We've released that information. Russell Vaught at OMB, so I will just repeat that. So I say strong growth, limit government, and the burden of debt and deficits will come down.
But you only have so much power over that budget because Congress actually passes it, the spending bills.
You think? Yeah, really? Well, we'll work with them.
Okay.
We'll work with them.
So this says, since the 1970s, workers' wages have been stagnant. Has that been a good or bad thing for the economy?
Listen, I want the workforce to have the best possible wages and salaries imaginable. I'm not sure, I don't know. These are a lot of statistical debates about these numbers and what's included in the numbers and whether they're after tax or pre-tax. I don't want to go there this afternoon. I'll say there's some truth to that, but not a lot of truth to that. Okay. I just don't buy it. But putting that aside, look at a lot of conventional, what I'll call mainstream economists and their models assume incorrectly that more people working at higher wages is a bad thing because it's going to cause inflation. And I want to singularly disagree with that point of view, as I have for the better part of the past 4 decades. More people working and prospering and producing and investing is a wonderful thing. It's called prosperity, and it's called higher living standards, and it's called the fruits of free market capitalism, if we can move in that direction. There was a guy on TV, I can't remember his name, years ago, who used to open up every show by saying, free market capitalism is the best path to prosperity. I don't know who that was, but you may recall. My point here is that I believed it then, I believe it now. President Trump believes it as well. That's why I'm here, one reason I'm here. I don't want to limit. I don't know what the limits to growth are. I don't know. I don't believe there are limits, period. I just don't believe that. With the right incentive model, people exercising their God-given creative talents, there is no limit. Do you see what I'm saying? I want to break through this iron lung econometrica that says you can't, you can't, you can't. I say you can, you can, you can. And again, with the right freedoms and opportunities as incentives, we will. Look, my book about Kennedy, the Democrat, practiced it. Reagan, the Republican, practiced it, adopted Kennedy. We've had different variations over time. We haven't done a good job practicing it in the last couple decades. President Trump is practicing it. So what I'm saying is, I think we're going to break through all of these wage constraints and debates, all right? Now, debates never end, and you think you put a sword into something, but it never dies. But that's my point of view.
Well, what do you think does trigger inflation in that case?
Bad money, collapsing dollar. Bad money and a collapsing dollar. Boom.
What is bad money?
Boom. Bad money. Too much money chasing too few goods. Policies that destroy the value of the currency and the demand for it. We watched this in the 70s. We destroyed the dollar in the 70s. Inflation went to double digits. We came close to destroying the dollar in the 2000s under a Republican president, I regret to report. We had Democratic president, well, good dollar in the 80s, good dollar in the 90s under Democratic president and his Treasury Secretary, Bob Rubin, I thought was terrific. Terrible in the 2000s, much better in recent years, much better. And you can use, measures, foreign exchange, gold, commodities, the bond market, the break-evens and so forth. You can see it. That's what causes inflation, not too many people working. And let me add, from the way we look at these numbers, the increase in wages, again, well, for the whole workforce, but particularly the blue collars or the so-called non-supervisory, we moved up to 3.2, 3.4 in that area. They are earning it with higher productivity, which is the way that model is supposed to work. And I think you're going to see more of it. That's the confidence I have in our tax and regulatory policies.
So does that mean we shouldn't worry about these two questions about oil prices rising because of sanctions, and that's not going to contribute to inflation either?
I love the oil and gas story. The answer is no, it won't contribute to inflation. We are a country awash with oil and gas. And if some of our friends in the Mideast try to stop rejiggering the market, which I think they will, I don't want to get too specific here. We are basically terminating the waivers on the Iranian oil. I strongly favor that policy. I think it has no material impact on the oil market. Once you get those prices up, West Texas is, I don't know where it is today, $62, $63, Brent $10 higher. Then my friends, the frackers, will just start fracking like crazy. That's the way this game works, and they can turn those switches really fast. And I've been reporting on them for many years and talking to them in the White House. We, by the way, are working very hard to increase energy infrastructure and pipelines to get all this stuff distributed properly to the U.S., the Northeast and New England, also to Europe. World oil markets are well supplied. I was reading, up on one of the big financial websites, Goldman Sachs said there'll be no increase in oil, and echoed by a bunch of analysts. $60 oil strikes me as fine. 30, 40, not so much. 80, 90, not at all. I don't see any palpable impact. The world is awash with oil. The oil weapon, as it was construed in the 70s and 80s and 90s when OPEC was supposedly strong, the oil weapon has completely changed. The center of the world energy system is the United States. We are the driver. We are at the margin.
Should we be also investing in alternative non-fossil fuel sources of energy?
Well, I'm an all-the-above person regarding energy, and always will be. One of the worst things I've seen in this socialist discussion is the so-called Green New Deal, which would destroy fossil fuels, which in turn would destroy the economy. Now, in terms of policies, here's where we are. A level playing field, what we call all the above. So-called renewables and fossil fuels and nuclear. The trick here, in our view, my view in particular, is let us do away with subsidies, let us do away with picking winners and losers. The Department of Energy, which is a fine department, is not a private equity hedge fund, and let's just put everybody on the same economic basis without government subsidies and assistance. And beyond that, it's up to you. It's a private market decision. If you can make a buck in such and such, by all means, make a buck. I'm not here to pick or choose myself. I'll just say everything's in the mix. What I want is power and energy, and the world has changed. And I will say this, it's not only a plus for the economy. I mean, we're creating millions of jobs in the energy sector. That was, morbid dormant for decades. But we are also challenging, for example, Russia and their alleged hegemony in Europe. We're challenging them. Every foreign leader that comes to the White House for bilateral discussions, one of the great parts about my job is to get to sit in on that, want LNG, and we are supplying it. And our policy is trying to make it easier with respect to pipelines, terminals, and so forth. We want to go west also. I think there's a great LNG demand in Asia. So all I'm saying is we are energy dominant. The president has deregulated that sector. He's opened the door. The effect is very moderate oil prices, and the technological advances, in the fracking and horizontal drilling world are wonderful. These are American advances, and the rest of the world wants our product, and we're happy to supply it.
Do the risk of climate change come into any of your long-term economic forecasts?
I will say, as someone who is not a climate change denier, but who seeks good research, and we're doing some work on that internally, we're not scoring it as a big economic effect yet at the moment. We disagree with a lot of these extreme studies that I've seen. Some of the so-called extreme studies actually are misinterpreted. We've talked to some great physicists who think there is a climate change issue, but are very keen on doing better scientific research, so we're all better informed. So no, we're not putting a GDP value on it, but we're trying to look at it carefully. Not a dismissal, by the way. There's a lot of misinformation about that.
We're going to turn to the Fed. You have said, it's a question from somebody here, that you respect the Fed's independence, yet you say you want the Fed to immediately cut U.S. interest rates by 0.5 percentage point, and that you don't want to threaten the, quote, great economic recovery. Which is it? Do you want to influence the Fed, or do you want it to remain independent?
Well, one thing, just as a record, I never use the word immediately. Just want to walk that back. I never was. I don't want to obsess about that, but that was not my word. In any event.
But you do want it to cut
Yes.
the rates by 0.5 point.
The president believes, and I concur, that the Fed's target rate should be lower. That's point number one. As you may know, the president is not bashful about expressing his opinions. Successful investor and businessman, he actually knows quite a lot about this stuff. It's kind of fun to work with it on there. And I've spent a long time myself covering the Fed and so forth. Now, I do believe in the Fed independence. I began my career at the Fed. I believe strongly in Fed independence. I just think that if, people in other branches of government have opinions about this stuff, why not? Just put it out there, and we'll see how it works. I think, incidentally, there's really greater calmity or purpose than people may realize, because I meet with Fed officials. I, of course, read carefully what they're saying in speeches, in news conferences, and I see they're now backing away from the idea that more people working causes inflation. In fact, they're looking more at inflation targeting, and the trend line, as you may know, we've actually been disinflating. As the economy has picked up steam in the last 12, 15 months, the Fed's target inflation number is actually coming down. It's not deflation, it's just slower inflation, which is great, and that may lead to lower interest rates. We'll see. That's up to the Fed. They act on their own time. As I say, they are independent. But I think they're coming around to the view that we shouldn't fear stronger real economic growth, particularly from the supply side, investment-driven, but after all, if inflation comes in lower, as it has, then maybe real interest rates can come back down, or market rates can come back down.
Do your economic forecasts at 3% or more depend on that Fed cutting interest rates?
I can't remember our T-bill rates. We probably show it pretty steady over time. I'd have to go back and check that. Our assumption is based on tax and regulatory policies, energy and trade. We're not hanging our hats on any one particular thing. And again, you can be for an independent Fed, which I am, and have an opinion. I don't know. You guys have opinions? Anybody have an opinion here? Presidents have opinions. By the way, from time immemorial, if you read some of the amusing anecdotes and histories and interviews of past Fed chairmen, oh, shucks, it's Washington, stuff like this always happens.
So former Fed Chair Janet Yellen apparently questioned whether the president knows about the Fed's dual mandate, which is both maximum employment and low inflation. Do you know whether the president knows the dual mandate?
Of course he does. And I will say this, inflation and unemployment, since I don't believe there's a Phillips curve trade-off, I hope I've made that very clear. Low inflation leads to faster real growth. High inflation leads to lower real growth. The person that taught me that was Paul Volcker. I worked at the New York Fed at open market operations. I was also Mr. Volcker's secretary for 6 or 8 months, handling some of his correspondence and speeches, which he seldom listened to me, which is why it was a great job. We remained friends down through the years, a very wise man. He's the one who argued, when he became chairman of the Fed, in those days he was president of the New York Fed, that low inflation is a precursor to economic growth. And he continues to make that case, and so did Alan Greenspan. We've lost a little of that. I think it's coming back now. So I think it's perfectly consistent. I don't remember, what was the question you asked me? I was just going off on a rant.
I asked you whether President Trump is aware that the Fed has a dual mandate.
Yeah, and by the way, President Trump really is keen on a low inflation rate. I mean, I hear him talk about that all the time. And because the inflation rate is, shall we say, disinflating, PCE deflator, that's part of the reason he believes that the target rate could be lower. It's a fairly good model he has. So with respect to the answer to Janet Yellen is, yeah, he gets it. He's a smart guy, very well informed. Trust me.
I'm going to move on to China.
Go into the Oval Office. Let me tell you, I'm in and out of the Oval all day long, various formal and informal meetings. I can't begin to tell you, honestly, how smart he is. He knows stuff. As a businessman, he knows a lot. You got to be sharp. You got to know your stuff. On this and many other things, trust me. And he's a very sharp questioner.
Okay, so since you brought that up, I have a very long question here from somebody who says that you had an interview with Stephen Moore, who is under consideration for the Federal Reserve, in 2015. In that interview, Mr. Moore called the president's immigration policies, quote, crazy, and said they were, quote, bad economics and even worse politics, and you agreed. I'm not going to go into all the other quotes on this card, but I'd just like to know if your opinion has changed.
I'll just say, look, that was right at the beginning of the campaign. There was a lot of misinformation. There was a lot of rumors, and we had the story wrong. That often happens. I loved my 3-hour radio show. Loved it. Maybe someday we'll do it again. Who knows? So you talk about stuff. The more we learned, the more we changed our view on this. I think the president has very sound immigration views, frankly, once we got to know more about that. That was one of these gotcha reports. I'm sorry, but it's just of no consequence.
Do you think with the current rate of unemployment, we should be encouraging more immigration? I mean, at this point, is the workforce too tight?
Well, I don't. Look, I think we need a broad-based immigration reform plan. The president has actually given a lot of details on this. It didn't come to anything in 2017. We tried again in 2018. I don't think it's just a narrow question of workforce type things, although I grant you that enters into it. But you have to have a far-reaching plan. And we continue to strive for some collaboration with Congress on this, just never really happens. I agree with the president. Anybody with some common sense takes a look at what's going on the border, or the non-existent border, and whatever happened in the past, the reality is it's getting worse. The lines are being broken. The boundaries are being broken. Recent months, you've had 100,000 people coming in. I'm not going to go through all the litany here, and I don't want to go through all the talking points. I'm just saying that observing this and being part of various cabinet discussions and whatnot, you have an emergency. It's a law-breaking emergency. It's a drug trafficking emergency. It's a child trafficking emergency. It's a humanitarian emergency. It's a subversion of American law, and it needs to be fixed. And the president is working hard on that. And I think I fully support his border security policies, including the wall where applicable. Fully support that. But that too is. There's other issues here. We would like to move to a merit-based system, as many other countries have. We would like to move away from the family chain-based system. We'd like to have a realistic policy on asylum. There is none right now. Sanctuary cities is another matter. These crazy visa lotteries. There's a whole litany thing. Legal immigration is a wonderful thing for this country, and it always has been. Always has been. And there will be more of that in our plans, and we've discussed this. You know, people try to listen carefully, quit calling names, just look at what we're putting out there. Now, that will help the economy, absolutely. We'd like to have, just in general, without details, merit-based increases in legal immigration. That's
Do you
part of
expect Senator McConnell to propose something like this?
I don't know. I don't know. We'll see where the senator wants to go, and he's working with the president on virtually a daily basis on this. So, here's something. You go down by the border. I'm not an expert on this, but you go down by the border. Besides the law-breaking and humanitarian crisis, actually, a lot of local mayors and local elected officials will tell you that better border controls would be good for the local populations, help their wages, help their housing prices. There's actually some evidence of that the tougher President Trump has gotten getting that message out, you've seen a lift in local wages on the border and home prices. We'll see how that develops, but I find that quite interesting, and I find that from an economic standpoint very sensible. Mm-hmm. So, we will see, but I think the president's spot on this. It's a tough issue. I get that. It's a controversial issue. I get that too, but you just can't have a country without clear borders, and we need different policies, and maybe we can work something out with Congress.
Okay, I'm going to turn to China trade talks. We have a whole pile of questions which all are very similar, which come down to this one. Would you please brief us on the current process of the China trade talks? What do you expect the economic relationship to evolve into after a deal is reached?
I may disappoint you on this because there's not a lot more that I can say. We had good talks in Beijing. We had good talks in Washington, D.C. As Ambassador Lighthizer would tell you, a lot of progress being made, a lot of headway being made. The talks continue. The two sides are discussing now another visitation exchange. I'm not here to make an announcement, but both sides are talking about that. There may be more soon. We're not there yet. But we've made a heck of a lot of progress. We've come further, deeper, broader, larger scale than anything in the history of U.S.-China trade. And I think that's a good thing. I don't want to make a prediction or a forecast, but we've gotten closer, and we're still working on the issues, so-called structural issues, technology, transfers, ownership. Enforcement is absolutely crucial. Lowering barriers to buy and sell agriculture and industrial commodities. It's all on the table. I've said this before. I participated in a lot of this. And we'll continue. It's just a grand scale negotiation. I myself always try to play these things on the cautiously optimistic side. I guess that's my nature. I'm the happy warrior. But it's got to be the right deal. The president will say this. It's got to be a great deal for the United States. It's got to be. And it's got to be enforceable. Got to be enforceable.
In the meantime, there's been a lot of tariffs and other issues that have hurt some American business, some American farmers. Is that just part of what has to happen when you're creating such big changes? And what do you do about that?
I know it's a tough one in some areas. This one, I hope the sum of the parts will be great. That's what I hope. Let me tell you something, as So
What does great look like?
I'm the free trader in the building, and maybe not the only one. But here's one thing I've learned. I've said this before. Here's one thing I've learned. The use of tariffs, which we avoided like the plague under prior administrations, both parties, the use of tariffs can be very important in getting trade deals. I think President Trump has taught us that. Amid skepticism and controversy, perhaps, but I believe that Chinese tariffs on China were instrumental in bringing them to the negotiating table. I don't deny that there were costs in some areas. I think they're manageable costs to the United States. And we did back up the farmers who were great patriots. But here's the point. The degree of unfair and unlawful trading practices engaged in by China for decades had stopped because it was acting to the detriment of the American economy and its workforce. Have stopped. And words, negotiations are insufficient. The President has used tariffs effectively, in my judgment. I have defended it from day one. I'm not a tariff guy, but I think he's right. I notice a lot of other people have come on that board. My friend Jamie Dimon has said as much, but others have said as much who avoided the tariff issue. President Trump's the only guy to take, he's had the backbone to take this issue on and not let go. Other presidents have talked about it and did nothing. Ownership, forced transfer of technology, intellectual property theft, cyber hacking, tariff and non-tariff barriers and commodities, and so forth and so on. And China's Peck's bad boy in the world trading system. And our allies in Europe and Japan agree with us. We've written co-statements, trilateral statements out of the UN with Japan and the EU. You'll hear more about this week. Prime Minister Abe, a great friend and ally of ours, is going to be here. We're working together. It just has to stop. Had to stop. The degree of unfair, non-reciprocal trading has had to stop. Now, will we succeed, Allison? I don't know. Again, I'm going to play it from the cautiously optimistic side. We're a heck of a lot closer than we were. I won't say when this journey started. I came a year ago, a little more than a year ago, and was thrown right into it. I went on the Beijing trip. U.S. and China have a much longer history, but I think in earnest, the last 12 months or so have been, and sometimes, as you know, it goes hot and cold, but we're a lot closer. But it had to be done. It had to be done. We had to defend American economic interests in the trading world. A lot of the trading world's broken down. WTO's broken down, and we're not alone in that view. So I meet with all the G7s and G20s and the bilaterals. We're not alone in that view. I think the President's taken the right view. The President has taught me a little bit about negotiation. How's that? How's that? Old guys can still learn.
So we're almost out of time, and I know you have to get somewhere very quickly. So I just want to mention a couple of upcoming events at the National Press Club. On Friday, we have the founder of Panera Bread, Ron Shaish, who will be talking about how to attract good investment. On May 2nd, very importantly, is Night Out for Austin Tice, which is a campaign that the Press Club is spearheading to help get awareness and fundraising for a journalist who's being held in Syria. We're trying to help the U.S. government, in fact, find him and bring him home. There are restaurants across the country participating. You can go on the website nightoutforaustin.com and find a place to eat, and some of that money will go to this fund to help bring back a great American journalist, a former Marine, and an Eagle Scout. And on May 17th, we have a headliners book event with David Moranis, author of A Good...
Moranis. He's a wonderful author.
I asked everybody else how to pronounce their name, and I didn't do that one. Sorry.
I was in his Clinton book.
Anyway, come out anyway. 8:30 a.m. on May 17th. And finally, because you're such a good sport, you get...
Oh, my gosh.
The fabulous and highly coveted National Press Club coffee or whatever you want to put in it mug.
You're a wonderful group. I'm very grateful for the invitation. Allison, you're a wonderful moderator. We'll get you your own TV show on CNBC.
I'll be waiting for the
I will
call.
pass this through the ethics office. And thank you very much. Appreciate it.
Thank you.
Thank
Mr. Kudlow has to get to a meeting at the White House in like 10 minutes, so if everyone could stay seated while he gets out of here, that would be really nice of you all.
Oh, if